Interest rates are rising, investors are looking for safety in the market, and one place they're turning to is dividend stocks. So I wanted to highlight 4 high-yield dividend stocks that I really like right now, really solid businesses behind them, and the kind of businesses that I think could still grow for the next few decades. Before we get there, I do want to thank the Motley Fool for sponsoring this video. You can get their top 10 stock picks to buy right now at fool.com/rive. It really helps out the show, and there are some great picks from some great investors. That's fool.com/RIIV. Check it out. And don't forget to subscribe to Rive Investing to get updates on everything that I'm covering throughout the market. Now, the first dividend I want to highlight today is Verizon. You can see here from this chart, Verizon has an incredible dividend yield of 6.7%, and the market just really doesn't like this business right now. It's not growing in the way that investors would like, potentially losing market share to some of its competitors, although it's starting to kind of turn that around over the last quarter or two. What I think investors are missing right now is Verizon's growth opportunities in the home and bundling. They've had a lot of success doing home internet, 5G, adding hundreds of thousands of customers per month. When you add smartphone service with home service, now you have the basis for a bundle. They're starting to add streaming services as well. We've seen them partner with Apple and also Disney and Disney's suite of products. I think we could see that bundle expand and have Verizon be basically the new triple play. If you remember how cable was always the triple play, and that was the reason that they were able to capture so much value in the media business and in internet and broadband. And I think that Verizon could be a company that plays a big role in that in the future. At the end of the day, they only really have 2 major competitors, so that's a great place to be. Great dividend yield for investors right now too. The next company is NextEra Energy Partners. Not quite as high a dividend yield at 3.8%, but this is a business that has long-term contracts to sell electricity to utilities across the country. They buy renewable energy projects and then sign long-term contracts, take on some debt, and then as they are generating revenue over time, they're able to pay some of that back to investors. You can see here that they're still expecting 12 to 15% average annual growth through 2025. So that dividend could be $4.45 to $4.95, depending on how the business performs. That's what management is expecting. So the dividend yield that we see today could actually go up. Now, keep in mind that they have contracts with utilities, which are very reliable partners to have, and they're also signing long-term contracts. So these are contracts that are often 20 years or more in duration. So this is a dividend that is going to continue going for decades. I would think that investors can rely on this reliably, and if the dividend continues to grow, that's just all the better for this dividend stock long term. The third stock is EPR Properties. Now, I had a longer conversation with my colleague Matt Frankel about EPR Properties, which I will link to here, but the basics here is this is a REIT that has experiential properties. So Regal Entertainment was really one of their big partners. This is actually the concern Regal filed for bankruptcy, although they have paid their rent for October and November, but there is some uncertainty there. That's the reason that the stock has dropped and the yield has risen to 7.4% over the last couple of months. But I think the future here is partners like Topgolf. But I think the future for EPR Properties is more partners like Topgolf. I think the experiential business is going to continue to grow. People, as they have larger and larger digital lives, people are working from home more, they're going to spend more money going out and doing things. That's why companies like Topgolf are doing so well right now. So maybe the future isn't movie theaters, but it is experiences, and EPR Properties is the REIT play there. Like I said, really high dividend yield at 7.4%, so definitely one to keep on your radar. I don't have this in my portfolio yet, but it is on my short list right now. The final stock of these 4 dividend stocks is Simon Properties. This is simply one to just keep it simple. It's one of the biggest mall operators in the world. 5.7% dividend yield, so a very high dividend yield. I don't think that malls are going anywhere, especially with the way that we've seen malls upgraded by company like Simon Property Group over the last few years. These are now destinations, so a little bit similar to EPR Properties. It's not about what you're necessarily doing at the mall. It's about going out and having an experience at the mall, going to restaurants, going to experiential shops that are there. It's more than just a shopping experience like it might have been in the 80s or 90s. And Simon is really leaning into that. So I think this is a company that's going to continue to do very well. It may not grow the way that it has over the last decade or two, but this is still a really strong company and a really strong dividend for investors. What do you think about these 4 stocks? Are these dividends that you own or that you're interested in buying? Leave your comments in the comments section below. Follow Rive Investing for more investing insights. I will be back regularly with new ideas and insights for you, and I will see you back here next time.